Good evening, good afternoon, good morning, wherever you're watching or listening to us from. Welcome to Stocker Team, the Investors Channel. Today we'll be talking about the Trump stocks, and because the inauguration started yesterday, a new government is now in power. President Trump came back, Trump 2.0, and there are stocks that are doing positively, some negatively, some not neither here nor there. Today we'll be looking at what is the implication and how should you position or reposition your portfolio for the year to come, especially for the next 4 years. On that note, if you haven't subscribed to our channel, please subscribe, put on your notification bell so that you don't miss any updates that we bring you. Before we go ahead, a disclaimer: every information that we share on this channel is for education purpose only. So please do your due diligence or consult your financial advisor before making any decision. We will go directly into the major headlines for today that are driving the market so that you can get an idea of how this applies to you and your portfolio. Apple got double downgrade from Jeffries and also Loop Capital because there are fears that Apple actually sold less and less iPhones in the last quarter of last year. Apple is yet to report its results for last quarter of last year, but there are actually fears that Apple could actually report a lower than expected revenue and perhaps maybe a lower than expected net income, but it's yet to be seen. Apple is a buy for me. Apple is a buy for this channel. Tesla continues to sink because President Trump actually ended the electric vehicle mandates, part of the executive orders he signed yesterday. Tesla is not a buy, it's not a sell, it's a hold for us. MicroStrategy has now bought about $1.1 billion. It's neither a buy or a sell, it's a hold as well. We play in crypto space, not directly, but Robinhood is actually one of the top picks, part of the Magnificent Seven for Stocker Team. If you haven't watched that episode, I will drop it in the comment in the description of this video. Nvidia continues to go up. President Trump actually cancelled some of the mandates that the last President Biden actually signed, which actually restricted the likes of Nvidia. So the SMH semiconductor ETF that we recommended as part of the ETFs to own is actually doing very well. Year to date has done about 8%. I'll drop the link to the top ETFs video in the description of this video as well. The Dow continues to rally about 400 points. Investors actually believe the whole noise about President Trump having a whole lot of trade tariff, trade war and all that might not as might have been exaggerated and might not as been very, very hard on the market. So let's go to the topic of today. So we're going to be looking at the top Trump stocks, majorly not necessarily companies that belong to the president, however, but companies that are likely to actually do better or do worse or neither here nor there. As soon as the market started trading today, as a matter of fact, yesterday, oil or the oil sector actually started trading negatively because the president said the country will be producing, the US will be producing more oil, more than ever. Although the production level of the US is at all-time high, but he actually wants to take it to another level. Some other sectors like the EV, we talked about Tesla. Tesla actually has really, really done very, very badly in the last couple of hours that the market started trading. Let's go to the demo of today. We'll start with Tesla, and we're going to talk about why we think Tesla is a hold. It's not a buy for us on Stock Team. We don't necessarily recommend Tesla. And I'm going to be going to our demo board. So starting with Tesla, part of the reason why we have never really recommended Tesla is for so many reasons. And one of the most important one is because this company, although it's profitable, this company has actually been declining in terms of the number of deliveries that it's making, the number of cars that is likely to sell, actually, especially and more importantly in China. BYD is now the number one EV maker in China. Tesla actually benefits a whole lot from the uh, subsidy regime, in the US. So if President Trump is canceling this, that is actually a disincentive for a whole lot of people who buy electric vehicle for these reasons, because they get subsidies, they get a lot of tax benefits. During the last government, Tesla actually saw some significant jump in its deliveries. But if you look at the last 2 years, Tesla deliveries has actually been going down. As a matter of fact, the internal combustion vehicle, which is the ICE internal combustion, vehicles, which you are actually used to, many of these vehicle makers are now moving to hybrid, whereby, there is the element of those cars not just relying on being moving to EV totally, but a combination of some battery level, and also they are able to use either diesel or petrol or gas, like you have it in the US. So at the end of the day, we don't necessarily see Tesla accelerating as on the delivery side of things, or also accelerating as a company. Tesla might also continue to rally from time to time, but it's not sustainable. Because if you look at the last 5 years, yes, Tesla has done about 1,000%, but the last 1 year it has really slowed down, and it's just about 100% in the last 1 year. As a matter of fact, the entire gain that you are seeing was actually gained towards the end of last year when the new government came. And now that the first day of the government, the first working day of the government, Tesla is on the back foot. The current government doesn't necessarily support subsidies. It doesn't necessarily support a whole lot of benefits for the everyday people, but it benefits the big companies. It benefits the oil sector, actually drilling more and producing a whole lot of oil for the US, which is going to be a major consumer of oil. Is the largest consumer of oil. But actually, the aim of the US drilling more oil is to actually bring down the price of oil in the international market, which directly and indirectly, you know, is linked to inflation of goods and services in the US. And that's the game that the current president wants to play. So as a Trump stock, Tesla is going to be, for us, we believe is going to be an underperformer. Yes, the AI promise, the whole AI, robotics, a whole lot of the robotaxi, all of those things are still more or less either is a moonshot, or they are not medium term goals. They are long term goals that even the likes of Uber technologies will continue to still rally, because their position is not threatened by a robotaxi that Tesla is proposing that has not started operation, and the company itself is not necessarily delivering more vehicles like before. Now I'm going to the oil sector, and I'll be taking one of one of the most popular oil companies, that you actually know how they. If you look at the entire ecosystem, you will see that many of these stocks have actually started pulling back aggressively, and that's because even when there was the optimism that this sector will outperform this year, this sector is likely to underperform, because they make more money when the oil price in the international markets actually goes higher. And if they have to actually do buybacks, because most of the stocks like Chevron, ExxonMobil, the likes of Schlumberger, a whole lot of all of these oil majors, Shell, British Petroleum, BP, if they can't do buybacks, their stocks are likely to actually underperformed this year. Buybacks is basically when these companies actually buy back, literally buy back some of their shares, in the open market. What that does is that it actually increases the value of the stock that you own, either as an investor or as an insider. But at the end of the day, if these companies don't make the record profits that they've made in the past couple of years, uh, they are actually going to underperform, and that's why we don't necessarily recommend the oil sector to play in. It might be a short-term trade, a short to medium-term trade, maybe a rebound when the US actually rolls back some production, but we don't still have these numbers that President Trump wants to do in terms of output for the US. But let's see how things goes. If the game of play is going to change, then we'll actually talk about that. The sector that we actually believe that is likely to do very well is actually the manufacturing sector in the US. And if you look at the stock of 3M, one of the major companies that produces a whole lot of industrial materials and so many equipment, or a whole lot of adjuncts, products or commodities, used in further production. 3M is one of the bellwether that you can actually consider. Just because the president is saying there will be a whole lot of production in the US, a whole lot of drilling in the US, a whole lot of tariff strategy that is actually going to rebalance the trade deficit for the US. 3M actually jumped with a minimum of about 5% as the market is still trading. That is a huge one, and that is actually a feeling that the market believes that the domestic manufacturers in the US are likely to do better, are likely to actually export more, or even get better deals, because the US might not necessarily go into a trade war with China, but there might be a trade deal that will actually cut a better deal for the US. And the likes of 3M are actually, doing better today. If you look at the likes of, let me see, Fastenal, it's also an industrial, producer of, a whole lot of things. Many of these stocks are doing better today. If you actually even look at the likes of Walmart, who actually import a whole lot of goods into the US. Walmart, just for today, and Walmart has a market cap of over 700 billion, but today alone, Walmart has actually done almost 2% today. So if we want to round off our demo for today, and the fact that the top Trump stocks for today, we will be looking at the manufacturing sector. They are the winners for today. They are likely to continue to win as these trade negotiations are likely to start. The likes of China, the likes of the EU, Mexico, Canada, and the UK, and some other countries in the Middle East, they are likely to actually go on the negotiation table, because the current president sees himself as a deal maker. He seems to, he even has a book, The Art of the Deal. So he's a transactional person, and he likes to actually cut deals, and he believes he always wants to actually win more, even if the counterpart is not going to lose. So let's continue to see, and we've actually really talked about a whole lot of things, but in a very deliberate way, to make it more understandable, to make it more relatable. So please continue to subscribe to our channel, put on your notification bell so that you don't miss any updates. So the manufacturing sector is likely to outperform. The oil sector is likely to underperform or on a neutral level. The electric vehicle sector is likely to actually underperform or just neutral. And that's why in the next coming days, we'll be talking about the manufacturing sector. Walmart is not manufacturing, but it's a company, a grocery company that imports a whole lot of goods and services. Some of them produce in the US, but a lot of them produce outside of the US, even from China, and it could get a better deal because Chinese authorities might actually have a better deal that they will give to the US, which might actually benefit the likes of Walmart. So, on that note, we meet tomorrow. We are going to do part two tomorrow, where we'll look at the technology sector. So we have actually focused more on the oil sector and the manufacturing sector. Tomorrow we're talking about what is the implication of this, or of the new administration in the technology sector. Thank you so much. We believe that you've learned so much, and we'll continue to do more research and bring you all the updates. Till tomorrow, keep investing and keep growing.